Welcome to the Maximize Business Value podcast, brought to you by Mastery Partners, where our mission is to equip business owners like you to maximize your business value and achieve the exit of your dreams, whatever that means to you. With insights gained from over 100 business transactions, we share real-world strategies, lessons, and expert advice to help you build long-term, sustainable value in your business. Each episode is hosted by one of our Mastery certified partners. They're seasoned experts who've helped countless business owners navigate the complexities of growth, scaling, and building value. They bring first-hand experience, actionable insights, and a passion for helping you build a business that thrives. So let's dive in.
Hi, I'm Amy Morin, and welcome to the Maximize Business Value podcast. It's a podcast for business leaders who are passionate about building long-term sustainable value in their businesses. So today I am super excited to have Dawn Hryshko. She is of the exit planning team. It's a company that deals with tax strategy as well as exit planning. And welcome her to the podcast. Dawn and I are both certified exit planning advisors. We've gotten to know each other over the past few years in that arena and share some clients together. So Dawn, welcome to the podcast.
Thank you, Amy.
So today we're going to focus on tax strategy as part of the strategy in the exit planning world. And it is such a mystery to so many people. And Dawn, one of the things that I've loved about working with you and sharing your contact information with a lot of my clients is that you take that mystery right out of it. So that's my whole goal for our podcast today, is to take this something that can be mysterious and just kind of bring it down to the ground and fill our business owners with some information. So my first question is kind of based on, when business owners start thinking about exit planning, right? We encourage them to think about exit planning 3 to 5 years before they're ready for an exit, as you know, because we want to help them build the value in their company to close the value gap and the wealth gap. Having said that, there are a lot of tax decisions that affect the sale of the company, and there's some timing that goes along with that. So what would you say is the most expensive, invisible mistakes that owners are making right now without doing some tax strategy planning, particularly if they can't wait that 3 to 5 year window, if they are looking to sell maybe in the next 12 to 18 months?
Well, I found that oftentimes an owner, if they are in a hurry to sell for whatever the reason, they're looking at the dollars that they can collect, but they don't realize that they won't be collecting all of that, because there could be a substantial amount of tax that is owed, not only at the federal level, but at the state level. Depends on how they're structured. It depends on what's being sold and how it's sold. And if you don't plan for it, it can shock you.
Yeah. And when you talk about planning for it, is it your CPA, which you are, as also a CPA and a tax strategist, but is it your CPA who does that forecast for you? Like, who on your team, Dawn, would help you figure this stuff out and help you design a plan in plenty of time beforehand?
Well, there are a lot of great CPAs out there, but there's also a lot of CPAs who don't want to dabble in that. They want to just prepare your tax return. So there's a big difference between an advisor and a tax preparer. And a lot of business owners may not know that. So you would want to first speak with your accountant and see if this is something that they are knowledgeable about and that they can help you with. One key indicator might be, do they do annual tax strategy planning with you as a business owner? If they don't do that, there's a good chance they are not in the exit planning world either, right? But it's still worth the conversation. And then if you can't use your current accountant for that, you definitely have to seek out somebody who has that specialty. And there are CPAs out there who have chosen to be exit planning strategists as well.
Yeah. So having sold a couple of businesses myself, I definitely got hit with a tax implication the second business we sold. And which is one of the reasons that I became a certified exit planning advisor, is my passion, having gone through I call it a couple of really bad exits. And it was a bad exit only from a standpoint of I paid the IRS a lot of money. So I've been on this quest now to help business owners not repeat my past mistakes. But there's, I thought I had some exit planning in mind, yet there are different strategies we use from a tax perspective, right? Because we want to pay less tax oftentimes as a business owner. So we take advantage of keeping some cash during that whole time that we're an owner, and then some of those go away, or we get penalized for them, particularly depreciation, right, when we go to sell. So how do you advise somebody in that situation when they're taking maybe an accelerated depreciation, if that's an opportunity, and yet don't realize that in a very short, in my instance, it was literally 3 years down the road I sold, but 3 years prior I didn't have it on my radar that I was going to sell. So how do you work with companies on that?
That is a great question. So it depends on what the assets are. So let's just focus on let's not focus on real estate. Let's focus on equipment and items that are used in the business.
Sure.
It makes a lot of sense while you're operating your business to take advantage of Section 179 deductions and bonus deductions. It just does, because it helps increase your cash flow for the year and minimize your taxes for the year. So, if you look at it from a strategic standpoint, you'd be a fool not to do it, right?
Right.
And especially when you don't realize that you might be selling out, in a short time.
Yeah.
So even though when it comes time to sell, if you're selling assets, which is oftentimes the case, rather than selling the ownership of your company to another owner. So when you're selling the assets, there is going to be that capital gains. Now, capital gains get a bad rap, but capital gains are actually beneficial to a high income earner. And I'll give you an example. Let's assume that on an annual basis, we'll use an entity that is not a C corporation. It could be a partnership, a sole proprietorship, S corp. These type of entities, the individual owners get taxed on whatever the profit is. So depending on what that profit is, it could throw the owner into a 34% tax bracket or higher on an annual basis. Whereas capital gains are maxed out at 20%. So not that we want to pay it, but having some capital gains as part of the sale can help your overall tax burden.
Got it.
If you find a strategic way to utilize that capital gains. Okay, so yes, it isn't pleasant, but it is a little bit more beneficial than paying the maximum tax that you could be paying if there were no capital gains.
Yeah, that makes sense. Yeah, it does. Yeah. So, we as entrepreneurs are brilliant at building businesses, right? But in our world, Dawn, and I think you may see some of this, but as a business coach, as a certified EOS implementer, what I see a lot is when I start talking to business owners about exit planning, it's as if you're asking a mother to prepare herself for the future, giving her firstborn son away to a future bride, right? It's really hard when it's your 3-year-old and you're thinking about that and you're thinking to yourself, there's no way that's going to happen, right? I just can't even picture that. And that's what I see with business owners a lot, is that they just can't picture their life without being a business owner of this business. So how do you see, or what kind of work do you do in helping them get through some of those mental blocks as well? Have you found any strategies that you think work in having those conversations?
Well, I have a very candid conversation with them, which may not
That's
be
one of the things I love about you, Dawn.
So when I sit there, especially if I know them, right? It's not something I necessarily would say with a complete stranger, but once I get to know you, I'm going to be very frank with you and say, there are 2 ways to exit: by choice or by God. You could die, right? Yeah. And do you want, and when we do focus on that, even though it's uncomfortable in that conversation, do you want your family to have to deal with what will be left if you don't do the planning, especially if none of the family is involved in the business? It makes it that much harder. And so that does spark additional conversation, because every business owner is going to say, we don't want our spouse and our family to deal with it.
Right.
So why don't we do some planning? That doesn't mean you have to sell in 5 years, but every one of us will exit our business at some time. There's nothing wrong with planning it, scaling it, enjoying it. And then when the time comes, it's ready for whoever is going to exit, even if the owner themselves isn't the one choosing to do the exiting at that time. It just streamlines the process and helps everyone. And that tends to get the conversation moving in the right direction to talk about how we can prepare them for exit.
Yeah, it sure does. And sometimes I do, the clients that I work with, they come to me because they're struggling in their company, right? They're either hitting a ceiling in some aspect. They've hit a ceiling either on the revenue side, or they've hit a ceiling on getting the right people in the organization to help them. They're not making as much money as they used to, whatever it happens to be. And once we get their company really lined out, I call it, right? Really at the point that they want to, and they're growing and they're scaling and they have a life, and the company doesn't solely rely on them anymore, they keep it, right? I mean, why not? It's an awesome company at that point, and and they're enjoying that. So yeah. When we start doing work in our company, or tax planning, so to speak, right? A lot of emotion comes up to that. The IRS, those three initials, just bring a lot of emotion, anxiety with business owners. So, what do you see as the biggest triggers when talking with business owners about tax planning and IRS and in those conversations?
I always tell everybody not to worry. They're not the big bad bullies you think, really. I know they can be intimidating, but I guess maybe I'm just not afraid of them. So, I try and help whoever I'm speaking with to realize you don't need to be afraid of them. However, they don't deserve your money if there are legal ways for you not to have to pay them. That's the way I look at it, right? There's Internal Revenue Code for a reason. And there are many ways to utilize it so that you are paying the minimum amount that you're required to. And in some cases, you may pay zero on your exit, which is the world everybody would like, as well as you're scaling. Some clients I've worked with, they get concerned because they're hitting these thresholds, right? They're working with somebody like yourself and they're doing great and their bottom line's looking better. And then they start to panic because they don't want to give it all away to the tax authorities. Yeah. So there are ways to move it around, put it somewhere else, and so that there's benefits without it necessarily going to the tax authorities, and it's legal. And so
that's a great point, Dawn, because I think in our line of work, right, we both work closely with some financial advisors or wealth advisors a lot with business owners too, because there are many strategies aligned with that as well. Nice. What do you think is one piece of conventional tax wisdom that's actually hurting business owners in today's environment?
I think it always has. I just love when I sit down with somebody and they truly believe that in retirement or post-exit, they'll pay less tax. I have yet to meet anybody who decides to take such a backseat to their standard of living. So, right, we can live on Social Security. It's not happening. Now, there are ways to prepare so that your retirement assets are of a tax-free nature, but you have to pay some tax in the process of getting there. But it's rare. We are not going to step back, right? If we finally have this freedom from working day to day, and we are going to be doing things depending on what those things are, they're going to cost money, and we're not going to change our standard of living. And so I hear that a lot, where we've been taught, I guess, over the years as a society that, save for the future because you'll be paying less. Oh, that's not true.
And that is one of the reasons that we figure out what is the wealth gap of the business owner and figure out the value gap, right? Because we need to come to some sort of an agreement on those two things, right? The wealth gap is how much money do I need to live after this company I've sold it or I've exited. And to your point, who wants to have a standard of living that is 50% of what they're used to living on? And now you have all this extra time on your hands. I mean, it is your time to go have something else to look forward to do, right?
Mm-hmm.
But when that wealth gap is not aligned, and the value gap of the company is also not aligned with where you need it to be, then we increase the value gap of the company so that we get you the wealth gap that you want, so you can still have that standard of living that you're used to. And that's the ultimate goal, and that can be attained, which is really great.
Yeah. Mm-hmm.
Is there ever a situation, Dawn, where you recommend that business owners actually pay more of a tax now? And what is that? And what would be the strategy around that?
Well, sometimes it's not necessarily the strategy that the CPA is giving. It's just from having a conversation with the business owner. And sometimes business decisions have to take precedence over everything else. It could affect cash flow, and it most likely will affect taxes. But if it's the right thing for the business, you do it, right? That's what matters. The other area, I guess, if we just want to focus on tax, that I'm a big proponent of, and this is part of in the process before the exit, is I'm a big proponent of, as you're planning for this post-exit and what your wealth gap is and what you're going to need to live on, what type of retirement assets do you have? Right? Okay, that's very important, because now may be the time to move taxable retirement assets into the Roth type of programs, right? The non-taxable.
Okay.
And so maybe we pay the tax now. Maybe we pay the tax a year or two after your exit, right? We have to look at all these different pieces and what's going to be taxable when. We certainly wouldn't want to do it in the year of sale. That would be terrible. But it may make sense to do some of that a little bit every year, getting you to that point, so that you have a bucket of assets that are tax-free. So when you're working with your financial advisor for post-sale or post-exit and your accountant, hey, maybe you can be in that low tax bracket, right? Because you're taking a little bit out of this bucket and a little bit out of that bucket, and there's a nice blend. And so it's real important to work with a financial advisor as well. That's where there's several advisors working at once, helping the business owner so that they can prepare for that. Yeah.
Exit planning is a team sport, right?
It is.
It's a team event. Yeah. So speaking of that, Dawn, when you're not doing tax strategy with clients, tell us a little bit about how you're helping clients on the exit side.
Thank you for tuning in to the Maximize Business Value podcast. This episode is the first of a 2-part release. Part 2 will be posted next week.
Thanks for joining us for another episode of the Maximize Business Value podcast. I hope today's conversation sparked new ideas on how you can continue driving value in your business. But remember, it's not just about listening. It's about taking massive action. Visit our website, masterypartners.com, for more resources. Grab a copy of any of the books in the Maximize Business Value series on Amazon or via the links below. And don't hesitate to reach out if you want to know how to apply these concepts to your business. So until next time, I'm Tom Bronson, reminding you to relentlessly execute while you maximize business value.